So I know we don't have much time, so I'll be fairly brief so that we're able to address some of the issues. Just as a background, as CMA, we've been thinking about derivatives for a long time now. In fact, before the launch came through, we already had done some background work around the same, of course, in consultation with the NSE and other stakeholders. And the discussion that we're having today is just looking at the industry and trying to figure out what are the risks we have, what are the opportunities that perhaps are available, and what are the challenges. And once we're able to crack this, then we would have made a move that ultimately will make sure then our market grows. So I just wanted to have us introduce ourselves and then perhaps get deep into it. And I'm starting with, I think I can start with Edwin here. Perhaps you can tell us about yourself and what you do at Sterling, and also as a market maker, what are some of your experiences insofar as derivatives are concerned, so that then the audience can get to know what are some of the issues that we want to flag as a market maker in the derivative space.
Okay, good afternoon. My name is Edwin Manjohi, equities and derivatives trader at Sterling Capital. I was primarily an equities dealer for, let's say, more than 10 years. So we've currently taken on the role of a market maker in the last quarter. So from around July. From my experience as a previous participant in the market, trading derivatives and now trading as a market maker, I can say that there's a lot of potential, especially in the retail market, in the retail space. So primarily, in the past, everybody was chasing about these big clients, but now we're seeing a lot more retail participation. If you've noticed in the spot market this year, in the previous years, we used to see the main five, the top five. So you had the likes of Safaricom, KCB, Equity, EABL. But nowadays, you see more volumes in terms of, the lesser value, okay, I wouldn't call them lesser value, but these more volatile stocks. So you have your likes of Kengen, KPLC, and just as mentioned, we've seen a spike in Kengen trades in the derivatives market. So our approach was, so we looked for these traders. So traders we know there's opportunity there. Traders are people who take risks. They come in short-term, very short-term people. So short-term, maybe take a position for a week or two. And so these are the kinds of people that we are kind of looking for in the market.
Okay, so maybe you can just inform the audience, who is a market maker in the derivatives market?
So a market maker, in essence, is a buyer or a seller of last resort. So we are there to provide liquidity for you. What we've seen is that most of the times the market is one direction, so like everybody's going long or everybody's going short. So we are there to ensure that we have spreads in the market, we have positions whereby anybody can participate, and so we will be a counterparty as Sterling Capital. So we are able to give you all positions you want. If you want to take whichever direction you have in the market, as a market maker, we don't take market direction. We are there to give you liquidity.
Okay. Yeah, so thank you, Edwin. I think what he's saying here is that anytime you want to either purchase or sell a derivatives contract in our market, you go to Sterling, they'll be able to purchase at whatever price you are willing to put up, and so long as it's reasonable within their bands, Sterling appointed a market maker.
So we were approached maybe 6 months ago.
Okay.
So it's been a process, and finally we got onboarded the NSE. So that was around June this year.
Okay, so if you want to learn more about a market maker and how you would want to purchase derivative contracts, Edwin is here to help you. I hope I'm not marketing for Sterling. Yeah, you need to start paying me, Silio. Okay, so let's go next to Justus Ogalo, my namesake. You made a very good presentation here about the journey that has been traveled by the NSE insofar as derivatives are concerned. Now, maybe you can point for us maybe major challenges, risks, or opportunities that exist. I know you talked about virtual assets and commodity markets and all, but then just trying to break it down for the audience to understand. So what is that risk that you're looking at as NSE and saying, if it materializes, then derivatives would have a challenge, and what is it that you could do in order to solve that challenge so that derivatives can pick up?
Okay, so I think one of the biggest risks that we have seen is one thing that we are already going through, and it's liquidity. Yeah, liquidity is a very, very big part in terms of building the market. So there are different initiatives that we have done, some of which are pointed out, working with different, partnering with different intermediaries to have solutions to these problems. But we cannot do them, we cannot solve them in isolation. Okay. It has to be a collective, collective effort. So as much as, yes, we together with our partners can begin a liquidity to solve the issue of liquidity, there are other ways that liquidity can also be solved for. One is in terms of access. Yeah? The more people you have participating in the market, the more organically you're able to solve for challenges with liquidity. As we've mentioned, I know countless times from any staff at NSE, our primary strategy revolves around bringing in retail investors to the market. I'm sure by now we have all known the number. The magic number is 9 million active. So if we look at translating that to the derivatives market, if we look at the number of actual investors who are participating now, it is about 100 a year. And that's when we are trading almost $1 million a year from just 100 people. Okay. What happens when we bring in 1,000? Okay. So providing access to the market, I think is one of the biggest ways that we can solve some of the, or rather we can solve our primary issue, which is liquidity.
Okay, maybe just following up on that, the question would be for the audience here, and maybe some are not already trading derivatives. Can you paint for us a picture of what opportunity there is for someone who's new in that space so that they can get interested in trading derivatives in the NSE? Okay,
so the opportunity is largely to manage risk. Yeah? So, you know, with a traditional investment into purchasing shares, you can only make money in two ways. Typically, it would be the price of that share going up, or the company paying dividends. But derivatives give you an opportunity to, to diversify that, such that if the price of a share is coming down, you can also still benefit from that. So having diverse strategies, being able to own a share, but profit if the price comes down, it gives diversity to that portfolio. Even for speculation, as we've seen from the data, and also as Edwin had said, the popularity of some of these companies that would have been, would have been derived this time last year, but they've become very popular in the market. Having access to them through the derivatives then also increases that opportunity to benefit.
Okay, so lastly on the preparedness of your platforms, I know the NCE CEO is here, we have carbon markets, we have virtual assets coming up, and it's not just stock. I think those products are actually coming to this market. So question is, to what extent is the NSE prepared? Maybe you can paint for us a picture of how comfortable would you get using your systems to trade, and the extent to which you are promoting these platforms for your stakeholders to know that there are opportunities within the market.
I think that's a good question. We are very ready. We can start tomorrow if it pleases. But I think our infrastructure currently is very well capable of handling multiple asset classes. Currently, as we mentioned, we're offering equity, single stock futures, equity indices, but we are very well, our systems are capable of offering all the way from currency to different commodities, digital assets, all that can fit in our infrastructure. Amongst the ecosystem we've created, we've also been able to solve for different aspects of default. right? So in the 6 years that we have been operating, we've not had any instance of a default by any of our intermediaries, right? So because of that infrastructure and setup for the market that we have a very, very robust default handling process. So we have not had any instances of default. We don't intend to, because all those risks are very well mitigated. So we are 100% ready. It's just to align on which product.
Okay, so the last point would be around technology, and colleagues here would want to know, if I have my mobile phone, can I be able to trade all those instruments you're talking about? Because I think there has been a lot of transition towards that, and a bit of promotion that the NSE needs to do to make aware the audience here that that is actually possible.
Yeah, so for ourselves as the exchange, we have made some structural changes also to our infrastructure to create gateways for intermediaries and technology providers to plug into our system to fast track that onboarding process. So we are working very closely with some of our intermediaries who can be able to directly connect to our systems and provide that access, that easy access that different investors would like to benefit from.
Okay.
Yeah.
Titus, I want you to accuse these two because you are a trading member. So then in case there is any of the areas they need to, pick up on or improve, I think a trading member plays an important role in interacting with the market maker and with the exchange. What are some of the challenges you've been facing even as you try to trade, either through the market maker or through the exchange? And please, feel free.
Let me start by...
Clap for him as he gives us...
let me start...
Yeah.
Thank you very much. Let me start with an introduction. My name is Titus Marenye. I've spent a better part of my working career trading. I've been lucky enough to trade global derivatives, commodities particularly, fixed income also at AIB, and also we were the founding, the first guys to do market making at the market. Probably just to answer your first part of accusing or finding the challenge in the space. Every new ecosystem, I think, will always have teething problems. Just to understand how to navigate through that. I think initially when we started, one of the challenges we used to have was what we call mark-to-market. So you'd trade a particular position, and for understanding mark-to-market is when you're trying to value your position end of day. So there's a methodology around it, but then the price point that was being picked by the system was at times would be off. So what ideally that happens, because in the space of derivatives, once you do a mark-to-market position, you have to either do two things. Number one, you'll take profits if the position is in your favor, or if it's out of favor, then you take a loss. So if your position is adequately, you think you're right and you're meant to make money, but then the mark-to-market was slightly off, then you'd end up getting a margin call, and now ideally putting more money into the ecosystem. But that has now been cleared. I think that's part of the learning journey that comes with the space. We're also very fortunate that through the regulator and also NSE, we've been able to up our market making fund. I think when we started, it was slightly above 11 million. We are talking anything north of 80 million now. Allows many people to come into the space. I remember when we were doing market making, the biggest challenge I had is I'd get a call, particularly from Edwin, and he had 30 positions to execute for Safaricom. And I'd tell him I can only give him 5 positions, because then, in essence, I need to take care of the market. If someone else comes, I need to have at least enough capital to be able to ideally serve the market. That's probably how I'd put it. So having more liquidity allows, now when I call him and I give him the offer he's telling me of 30 positions, he'll definitely be able to match my position and some, and tell me to add more. Yeah. So that ideally adds a volume. And probably a very interesting fact that maybe some people people need to understand about the derivatives markets. It's a market that has what we call a zero-sum play. Zero-sum play, in essence, means for every 1 shilling that will get into the ecosystem, it has to be distributed to the members in the ecosystem. So when someone takes profit, automatically someone has to take a loss. Unlike other markets like equities where the market goes up, we'll make money. And it stays at a particular point, no one loses. Our market means that if I call the market maker and say I want to go long, and the market is in my favor, in essence, the market making book will be taking a loss. So he needs to hedge that position. And of course, the beauty about also the market is we have additional avenues to hedge. Number one, based on the position of the market, he can go to the underlying stock and go long. Alternatively, he can do what you call he can borrow shares based on the position and and try to hedge through that. But in essence, and probably circling back to an earlier question it asked about getting more players in. I don't use the analogy of betting to explain this point, but allow me to use it. When you place a bet, the wager is really the win or lose, and the person who wins is the house. And by extension, when you lose, so when you win, you'll win personally, but when you lose, ideally the house wins. So why betting and probably as even crypto has really taken over and being very mainstream, particularly it's mainstream yet off-stream, is a functionality of them being able to offer very easy access. I think that's a challenge that both as a trading member and probably as an NSC and probably as a players in space, we need to look at and make it as easy as possible to bring as much people into the ecosystem and in the easiest way possible. Number two, functionality of risk. People take risk, so I don't think that's new. You just need to be explained what the risk is.
Yes.
And it's also very exciting. Once we start getting commodities in play, when you start getting, ultimately, by the way, the space can allow you to trade anything. The derivative space, you can even speculate on how long a night will be, by the way. As in you can create, there's a market, the market called polymarket in the States. Yeah. You can formulate whatever you want to trade against and take that position. So I think as the sector evolves, as we try to go through the teething problems, it's a very young space, a young stage of this. And globally, this is meant to be trading 5 or 6x on the underlying stock. Yeah, so there's a lot of upside on this particular.
Okay, so we also hear that there are very few traders in the market who are able to execute trades. So if, for example, I'm in a given, with a given player, if I move, then I move with everything, and I leave the player, up dry and hanging. Is that true, or those are just rumors?
You trade with your money, number one. So if you move, you just be moving with your capital, as what any other client would do when he's changing probably houses in terms of execution. Another thing probably I tell the market is you can actually be your own market maker. It's all about understanding the risk. It's a game of risk.
Okay.
So if you want to have more people in the space, instead of trying to look more institution, just understand these traders that we're bringing on board. Probably a bit of incentive, maybe from the exchange to play around with, maybe with the cost on trading. But in essence, and probably with that, is that it allows more money, and this can be traded with all the 8 trading members. So the thing about moving doesn't really make sense because the ecosystem allows for anybody to come into the space.
Okay.
Yes.
Edwin, do you have any point to put across the audience to promote Sterling, or you're good?
In due course.
Okay. Yeah, so you're giving your last parting shot.
Okay, I think mentioned about liquidity. So liquidity, like Dr. Fraser here mentioned earlier, liquidity begets liquidity. So I can tell the audience that this liquidity in the market, will be capitalized to a tune of about 100 million shillings by the end of, in a few weeks. And there's potential for more, and I know there are some audience people here who have been asking that, do we have this capacity to fill their positions? And I can tell them that comfortably there's additional capital. So we know there's demand for the product, and also there's liquidity to provide for this demand. So it's like a chicken and egg situation whereby some people are waiting for other people to come in, and I can tell them that you just have to go with it.
Okay. Yeah. Justus, do you have something to add?
How much time? I have a lot.
2 seconds.
Okay, I think there may be a few key areas that I think need to be sort of addressed by the market in different ways. One is on the securities lending and borrowing. I think there's need to push for a bilateral model. As Titus and Edwin would probably tell you, it is too expensive to borrow shares in the current framework. But a bilateral model, which is the global standard, makes the market a lot more efficient. So I think that is one key thing that needs to change. The second is more of a call to action from all the different sector players, from the intermediaries, or let me start by saying, I think we've been sitting in a position where everyone has been waiting for somebody to do something, but there's no one coming to do something. It is us. So from the intermediaries who are waiting for the foreigners to come or for the fund managers to come, they won't come until you set up a runway for them, right? For the custodians, same thing. We can't wait for the fund managers or the clients to start trading, but you are standing in the middle of them being able to perform that function. And again, also to the investors, yeah, we can't be waiting for the other fund to start first before us we start. So I think there's a bit of a call to action to each and every one of us. I think also one thing I also picked up from some of the opening remarks by our leaders in the room is that we are also, as an industry, operating in different silos, right? We have the same intention, the same agenda, but we are operating in silos. As Mr. Shamia said, he met with the president, and the president was asking him. From the regulator side, I know we've done a lot of work. We've been working together, but I think there are some ideas that I've picked up from some of the team at the regulator about things that we know we should think about this. From the academics also, I've been working quite a lot with Dr. Frazier, and some of the things that we've been able to pick up on, we've been able to adapt. But I think the moral is we have been operating in our own different silos, and it's time now we just harmonize that effort. I think also just want to recognize even the commodity side. We've seen a lot of potential in that sector, but I think we have also personally, we've been focusing on what we know best, which is the capital market. So I think those would be my main points.
Thank you. Titus, do you have something to add to what you already said?
I look at probably the most popular stock trading apps globally. I think there's some gap, maybe from our side, maybe from the tech players in the market, or probably anybody who thinks he can be able to solve that gap. Of solving the, should I say, the experience, the user experience. Because ultimately, when you go to the customer and the clients, and that journey has to be exciting. I think there's a lot of personal drive, maybe, for example, from students who are probably doing a master's, so they're more encouraged to get in the space. But from someone who would not normally probably get in the space, we need to get this product exciting. I think it can start probably with the user experience, initially from the solution. And with that, I think the rest will sort of fill in, because the ecosystem already exists. Just that spur to make it exciting for the market. So yeah, I think that's something you can look at.
Thank you so much. I think it's very clear what we're able to put across. There are issues around SLB. There are issues around access we need to sort out. There are issues of apps, Wainaina, that we need to figure out how to sort out, so then we improve the access and excitement in trading in some of these products. Borrowing from Titus, he talked about how gambling is easy, quote unquote. Why can't we make it easier for capital markets for someone to actually trade? Because again, you know what you are trading in capital markets, but I'm not sure you know what you're trying to do when you're gambling. But if you're gambling at some point, if you gambled in the past, please put up your hand. Yeah? I know there are a few here, but I also could have been doing the same, but I don't want to raise my hand. So with that, I want to thank you very much for this. Conrad, you can come to the floor and continue the session.